Okay, we've got Ruchit Jain and Chandan Taparia joining us. Ruchit, how are you? Let's start off with what you're tracking on the Nifty today.
Good morning, Ava. Well, probably after the much volatile trading session what we saw on Friday, on charts we have observed that a reversal pattern called bullish hammer has been formed on Nifty. And as SGX Nifty is indicating that we are going to open higher with a gap of opening after the formation of a reversal pattern. But if we see the higher degree charts on weekly charts, then the patterns are still bearish. We have not seen any kind of bullish formations on the weekly charts. So no positive indication on the larger degree chart, and a positive indication on the daily time frame chart indicates that we may see a pullback move from here. We are not expecting this to be a reversal or trend reversal or any kind of bottom that has been placed in the markets as of now, till we get any signs of positive signs on the weekly charts. So this pullback move which we are seeing after this positive opening may lead index further towards 7150 or even 7240, which was the low made in month of January. So the support was breached last week, and now that could act as a resistance going ahead. So those who are trading from short-term perspective, definitely they should go long, stock specific long for Nifty target of around 7150 and 7240. Whereas the positional traders, I think still bottom is not in place, and from there onwards we might see one more leg of correction.
Okay, what about the Bank Nifty as well, Ruchit? And in particular, let's talk about Bank of Baroda. Given the kind of numbers we saw over the weekend, what's the kind of downside that one can expect in that stock?
If we speak about Bank Nifty index first, then on Friday's trading session we have seen good reversal in Nifty, but Bank Nifty has not shown such reversal pattern. So probably I think even if we see any pullback move in index or in the broader market, I think the upside would be much limited in the Bank Nifty index. On the high side, 14,500, 14,600 range would be a stiff resistance, and I think any pullback towards that zone could again be a shorting opportunity in Bank Nifty index. Bank of Baroda, after the weak set of results, it may open even if it opens with a gap down. I think the downside would get restricted if it comes around 105 range. So that's a good support for the stock. I think if we see in the month of March 2014, the stock had shown good up move from that 100 levels. So again, if it comes around 105 range, I think the stock would take support over there. But still, I would avoid the traders to stay away from any sort of PSU banking stocks as of now, because these stocks have been falling the way the wave C, which is their last leg of fall, is taking place in this. And probably I think the correction could be more sharp if again Nifty starts falling after this pullback move is over. So probably stay away from this PSU banking stocks. I think Nifty or other non-banking names in the Nifty could be the place where some trading moves could be expected on the upside in near term.
Okay, Chandan, let's get your view in as well. There is a sense that we may see a further correction, and then perhaps that this bounce is temporary. What are you thinking? I mean, what are the cues indicating?
Yes, first talking about Nifty index, it was down by around 6-7% on last week. But interestingly, it has taken support near to 6868 zone, and that is the multiple support zone as per the technical and the derivatives data are concerned. 6868 is the lower band of the falling channel, and this channel is working well from last 1 year. And 6868 is near to 200 weekly day moving average, and market has been holding the gains about 200 weekly moving average from last 2-3 years. And third thing, that this is the high of April 2014, and after that the rally started. So the market has taken support near to 6868 zone, and till this level remains, market has potential to give a bounce back move. Although medium term trend may remain negative, but the way it has taken support and now holding above 7050 may take it to 7200 to 7240 level. So as of now, we are expecting a bounce back move as market has taken support near to the lower band of the channel. Sustained put writing is being witnessed at 7000 and 6900 strike. Market fell down below those levels, 7000 psychological level, but still open interest on the put side is intact. So that also supports our view that participants are expecting market to time being stable above 7,000 zone. So till it remains above 7050, I'm expecting a bounce back move towards 7200 to 7240, and after that market again may fizzle out for the lower level. Downside major support is near to 6868. Till it holds, we may see range bound move, but below that, it can go to the 61.8% retracement of the entire swing, which comes near to 66 kind of level. But as of now, the way market is trading at oversold territory, a small bounce back move cannot be ruled out. Now, talking about the bank nifty, that is continuously underperforming the broader market. Nifty to bank nifty ratio, which used to be near to 1.25, 1.26, and that is also the mean of the standard deviation of last couple of series, now has come to 2.02, 2.03, and because of that, we are clearly getting hit. The bank nifty is underperforming. If market manages to hold, then bank nifty may see some short covering move, but it's very tough to comment for the bottom facing approach for the bank nifty, as most of the PSU banks are making the lower top, lower bottom formation and even breaking their multiple year low. As per the level is concerned, bank nifty has to hold above 14,200 zone to attempt for a move towards 14,400 to 14,500, while on downside immediate support exists near to 13,800, and below that it can slip toward 13,500 to 13,200 zone. So one is to look at all the database, but on immediate basis we are expecting a small relief rally or the bounce back.
Okay, fair enough. Jain, any specific call on a Bank of Baroda or any of the banking names in particular, given the kind of earnings we saw and the kind of reaction that we're watching out for today? It may be priced in, or we may actually see a stock-specific reaction there given those dismal earnings.
Yes, most of the PSU banks are making lower top, lower bottom formation, and these stocks are witnessing sustained selling after every small bounce back move. Our stock has potential to go down. It is now next support near to 102 levels, and that is the 2013, 2014 low level. So as of now, the support exists near to 100 to 103. It may find support, but to come into that level, it has to correct by 8 to 10%. So weakness might continue to be in the counter. 100 to 103 is the resistance, while on upside till it remains below 100, 1600, 17 zone will treat major trend as a negative only. Now talking about the banks where we may see some bounce back move, here I'll prefer with the Axis Bank or the SBI. Axis Bank comparatively holding the gains from last couple of trading session. The Nifty is making lower top, lower bottom formation, breaking all the immediate supports and making lower lows every time. But Axis Bank has been holding the gains and making the lower highs from last couple of weeks. Just in the month of Jain, it made low near to 368 and then 375, and again it is expecting to support of 375, and because of that, it may give a bounce back move towards 405 to 410 level. So those who are interested to go for a bounce back move can look at Axis Bank. While in PSU Bank, I'll only attempt for the SBI. I'm expecting 145 as a major support, and the put writing started to happen, so that level is likely to hold. While on upside, if market manages to hold, then the stock has potential to climb to 165 to 168. So Bank Baroda weakness might be there, but Axis Bank and SBI will be two counter where we can suggest for a bounce back move or the pullback move in the counter.
Okay, Ruchit, I think you also have a call on Axis, right?
Yeah, probably even we are suggesting to go long in Axis Bank. Well, one of the criteria where one should look to create any sort of long positions for this pullback rally is to choose the stocks which has outperformed the markets in the last week. So we have seen, in spite of the sharp fall in the Nifty and especially the Bank Nifty index, Axis Bank has outperformed the overall markets and even the other banking names in this space. So the stock is now not forming this lower bottom since last couple of weeks, although it is consolidating in a narrow range, but it has outperformed its peers and even the Bank Nifty index as a whole. Good amount of volumes have been seen at these lower levels, which is indicating that some sort of accumulation is taking place after the sharp sell-off which we have seen from 600 levels. So we are expecting at least a pullback move up to 425 in near term. So with the stop loss placed below 375. From just short-term trading perspective of about 6 to 8 sessions, I think one can go long Axis Bank at current levels for target of 425.
All right, fair enough. So that's the banking pack coming in. Let's just take a look at what else is catching our eye today as well. We also have, in fact, a little bit of traction building up on a Bharti. We had some recommendations coming on that one as well from an Ashish earlier. Chandan, I see it's on your list as well. Do you see a trading opportunity there? The stock did manage to hold out in an otherwise weak market last week.
Yeah, that's right. As you mentioned, that the stock is holding the gains even after the market weakness, and that is the reason that we are expecting a positive move to intact in the counter. The stock has been making higher tops, higher bottom formation on the lower degree chart, and holding the gains from last 2 weeks. It has seen the delivery volume of more than 60-65% in last 2-3 trading sessions, which also indicates that participants are accumulating the counter. On last trading session, it has surpassed above its 50-day moving average and managed to hold the momentum. So overall trend is now turning positive. We are expecting a bounce back move, so recommending to buy with a stop loss of 317 for the immediate target towards 344 kind of levels.
Okay. Let's also take a look at M&M, Chandan, because we're also, of course, tracking a reaction post earnings on that one. Lots of house views also coming in on M&M, mostly maintaining their stance but reducing that target price somewhat. How's it looking to you?
Yes, there are selective auto counters which are holding the gains even after the drastic fall of the market. M&M has been holding the gains between 1100 to 1400 zone from last 1 year. Whenever it comes near to 1100 zone, it tends to bounce back move led by the short covering or led by the support based buying interest. We have seen the same kind of scenario in the Ashok Leyland and the TVS Motor. So there is a reason that we are picking M&M for a long side. As I mentioned, that 1100 is the multiple support for the counter, where most of the time it turns on the higher side and gives the movement of around 8 to 10%. On last trading session, it is given a sharp move with rising trading and the open interest activity. So we are recommending to go long on the counter with a strict stop loss of 1130 for the target of 1215 levels.
Okay, that's M&M. A whole bunch of these OMCs also will be in focus. Remember, great set of earnings coming in from most of them benefiting from those lower crude prices. Ruchit, let's just get your take on some of the OMC counters. They've already seen a decent run-up, so do you actually see further room here on some of these?
If you observe the long-term charts of OMCs, all the three stocks, HPCL, BPCL, IOC, they have been forming this high top, high bottom formation. Although in last couple of weeks, along with the markets, even these stocks have corrected. But the stocks which are trading in a linear uptrend, in a long-term uptrend, and any such corrections should be used for medium to long-term investors to accumulate the stock. So nothing much specifically from short-term trading perspective, but I think this correction is a good opportunity from medium-term investors, those who can keep a horizon of at least 6 months or above. They can look to accumulate the stocks such as BPCL and HPCL at current levels.
Fair enough. Chandan, let's get your view in on this as well. And I noticed from the oil and gas pack, you're also tracking a GAIL. What's the strategy there?
Yes, I am not comfortable on all these counter, although medium-term trend is positive. But the way this stock started to decline, which clearly indicates some distribution started to happen, and traders, those who have taken the position, are going for the profit booking scenario. See, if you look at the entire market movement, we have seen sustained selling in the PSU banks and the metal counters, but oil marketing companies were holding the gains. But from the last couple of trading sessions, the way it is started to decline, I'll be cautious on the counter. Again, these counters may attract for the sell on a rally kind of strategy. Here I'll opt to sell GAIL India. The stock has broken the multiple support of 335, 333 zone. Earlier it was working as a resistance in the series of the December or the January, but now this started to work as a support, and after breaking the crucial support, the stock is becoming on the bear grip and also broken the support below 50-day moving average. We have seen built up of short position that clearly indicates that now the stock is turning in the bear grip. So that is the reason that we are recommended to sell on the GAIL on a bounce back move. Keep the stop loss of 335 and expect a downside target towards 305 levels.
Okay, let's get some other strategies going as well. Ruchit, what else is on your radar?
Yeah, also expecting some sort of pullback rally in metal counters in next couple of days. So probably what we have observed that, as I even told earlier, the strategy for for trading in this pullback move should be use the stocks which have outperformed in the recent fall. Vedanta is one of the stock since last couple of weeks have been trading sideways. If you observe a bit medium to long term charts, then the stock has good support coming in around 60-61 range, which is 127% retracement of this previous up move, which was there from 111 to 300. And even the momentum readings on the daily charts are showing some sort of positive divergence. So not for a big uptrend, but again the stock would be only from a pullback perspective. So just for a short-term pullback rally, one can look to go long on Vedanta. Keep a small stop loss below 61 on the stock, and a target of 67 could be expected in 2-3 trading sessions.
All right, Chandan, what else is on your list this morning?
Yes, I'm also looking at positive sense on Hindustan Unilever. I'd say high weight counter, but having a defensive nature. It has been consolidating in a broader range, although it witnessed some selling from the higher levels because of the market pressure. But again it started to hold, and now holding near to its 50-day moving levels, it has potential to retrace the immediate high. So we are recommending to go long on Hindustan Unilever with a stop loss around 800 zone for the immediate target of 840 kind of levels.
Okay, what about some of these pharma names as well? We're through with earnings now. Sun was the last one that we were tracking there. Any of these that are catching your eye, or what's the trend looking like when it comes to some of the pharma companies at this point? Chandan?
Yes, talking about the pharma company, we have done a detailed study on the entire market movement. In this 2016, only one Nifty stocks is positive, and that is Sun Pharma, and longs are clearly intact in the counter, and it has not given a meaningful decline even after the market weakness. So this stock has potential to hold the market. It has been outperforming, and longs are intact in the counter. On weekly or the monthly chart, the stock is now set to give the multiple price breakout above its falling supply trend line. Looking on the option side, 820 put started to add fresh writing activity. This also supports our positive view on the counter. So till it remains above 820 zone, we are having a positive view on the counter for a potential move towards 880 to 888 kind of levels. Talking about the other pharma counter, we are not comfortable in Cipla. The stock has broken the multiple support zone, and shorts are intact in the counter. Because of the market bounce back move, we may see a relief rally, but now till it remains below 575, trend may remain weak in the counter. So if stocks moves towards 550, 560 kind of level, then we'll suggest to sell with a stop loss of 575. So we are having a positive sense on Sun Pharma, expecting it to move by 3 to 4%, while Cipla will be the sell on a rally candidate.
All right, fair enough. So that's the pharma pack as well that we're tracking. Ruchit, I also want to check if we are seeing a bounce. We were looking last week for which pocket of the market would really see that in. Anything else that you see emerging? I know you mentioned metals, but any other pocket of the market where you actually see strength, even if it's in the short term?
I think this telecom sector would be one of the sector wherein we may see some good positive momentum in this week. We have already seen some good outperformance by Bharti and Idea on Friday, but I think the upside momentum could still get continued in these names because these names have specifically bounced back from their crucial support zones. So overall, apart from selective private sector banks and some of the selective metal stocks, I think telecom stocks such as Idea and Bharti may continue the up move which was seen on Friday's trading session. So Bharti and Idea specifically, these two stocks should show still positive momentum in near term.
All right. In fact, we've got telecom on everyone's radar, it seems, this morning. In fact, all of our analysts have, in fact, taken a look at Bharti. Let's also go across to Prannoy, because he has more on, in fact, the merger of the scam hit National Spot Exchange with its parent Financial Technologies, making FTIL responsible for the liabilities of the fraud hit Commodities Exchange. Prannoy?
Well, yeah, so something that started in the late 2013 as the NSCL crisis, where in the go-downs also the quantum as far as the commodities are concerned was not recovered after the searches, and that again burgeoned and ballooned into a big crisis. The quantum was almost 5,500 crores, and as far as the Ministry of Corporate Affairs is concerned, and on the latest development as far as the merger notice is concerned, they've asked for a merger. As far as that, they've passed the final order to merge FTIL with NSCL, and FTIL has obviously posted a filing also on the exchanges saying that it's a highly disappointing order and they'll challenge it in the High Court. The government in its final order has said that more than 96% of the shareholder responses that have been received after the date was notified as far as shareholder responses go are orchestrated or concerted. Almost a little over 50,000 responses have been received, and the Ministry of Corporate Affairs seems to believe that a little over 45,000 of those responses seem to be emanated from an email ID that has been created by FTIL. So there are certain issues there as far as clarity on that is concerned. The FTIL would challenge the merger order in High Court is what they have said. And if you talk about a brief backgrounder, the Economic Offences Wing as well as the Enforcement Directorate, they have attached assets of the 24 defaulters, and the EOW has the total amount recoverable from the 24 defaulters, as I said, is close to 5,600 crores, and among others, other assets worth almost 5,444 crores have been belonging to the defaulters have been attached by the EOW. And if you talk about the Enforcement Directorate, that has attached assets worth almost 840 crores belonging to 12 defaulters. So in a long list of developments that has happened since the year 2013 to now, this is possibly the final showdown that we are seeing, and FTIL is obviously ready and willing to challenge this in the High Court, and they say that this will compromise on the limited liability clause as far as the merger is concerned once that happens. So they are most certainly willing to challenge it, and for more developments we'll keep tracking the story through the day.
All right, thanks for that, Pranoy. Okay, we'll continue to get you some big voices from the Make in India week as well. Nadir Godrej of Godrej Industries believes that a slightly higher fiscal deficit is affordable in order to build the country's infrastructure. Listen.
I firmly believe that this is a big turning point for India. But in order to fulfill all the expectations, we do need a few more reforms, and all of us need to work together. Industry, government, and the people need to get together to push this, because it's a big opportunity for India which we must seize. The finance minister announced that over time he wants to remove exemptions and have lower tax rates. I think lower tax rates will do a lot of good for the economy. I personally feel that a slightly larger budget deficit is affordable as long as the extra money is spent on building infrastructure or education or healthcare, all of which are very necessary and are very necessary for the Indian economy to grow faster. Everyone wants the GST. I can't think of anyone who doesn't want the GST. There are political hurdles, but I think very sincerely the opposition parties should sit down with the government and work out something that is good for India.
Okay, we take a quick break. When we come back, we'll continue this conversation with Ruchit and Chandan and continue to track their strategies as we head into pre-open. Welcome back. You're with us here on Street Smart. All right, the SGX still indicating a positive start so far. We've been in conversation with Ruchit Jain and Chandan Taparia. Ruchit, I'm going to come back and ask you to reiterate that call on the Nifty, in fact, for those of our viewers who've just tuned in. And given that we are seeing somewhat of a bounce today, are you expecting that to last or not?
So we have seen, after last week's selling on Friday's trading session, the Nifty index has formed a bullish reversal pattern called a bullish hammer on the daily charts. But again, if we observe the weekly charts, then no such positive developments have been seen on the weekly charts, which indicates that although we might see a pullback move from current levels, the broader time frame charts are not showing any positive signals from current levels also. So I think it would just be a pullback move. After formation of the reversal pattern, we are going to see a good up move opening, as it has been indicating by SGX Nifty. So I think on the higher side, 7150 and 7240 would be the levels to watch. 7240 was the low made in January, which was breached last week. So the support which was breached should act as a resistance now. So 7150 and 7240 are the two levels which we are seeing. So if anyone wants to trade long, look at the stocks which have outperformed the broader indices last week. That in spite of the index which has fallen, the stocks which had not fallen last week, that those stocks could outperform or those stocks could rally in this pullback up move. However, around 7240, if we get an opportunity, then again longs should be exited over there, and we can again see selling pressure building up from 7240 levels.
Okay, we're just scanning down to pre-open now. Chandan, let me just get your view once again on the Nifty as we're heading into pre-open.
Yes, the Nifty has recently taken support near to its lower band of the trading channel, and this channel is working well from last 12 months. This on last trading session, it has taken support near to 68, 69 kind of zone, and that is also 200 weekly day moving average and the high of April 2014 where the market started its move. So overall trend of the market is lower top, lower bottom formation and the weak structure, but because of the supported lower zone, we may see some bounce back move which may take it to 7200 to 7240 levels. We have seen put writing at 7000 and 6900 strike, and that is also supporting our view that participants are keeping their view firm that market may temporary or give bounce back move. Here we may see the bounce back move, but because of the overall trend, one has to be cautious. For intraday basis, if it manages to hold 7050, then one can definitely look a move of 100 to 150 points. But looking at the entire week structure, better to trade in the option strategy. Here we'll suggest to go for bull call spread by buying 7000 call and selling 7200 call. Here we suggest to go for bull call spread rather than going for a naked call, because now volatility is near to 24 and half, 25 levels. In the last week, volatility index has jumped by around 45%. So if volatility declines by 5 to 7% because of the market stability, then your option premium might decline by 10 to 15%. So here we'll suggest to go for the spread where you have to buy a call and sell out of the money call. So those who are interested to do the strategy can definitely do the same. Risk would be around 30-35 points, and one can get profit of around 60-65 points if market moves by around 100 to 120 points on the immediate basis.
Okay, so we are seeing that green on the screen in pre-open. Of course, remains to be seen if it actually sustains. Watch out for the first hour or so of trade today. The currency also marginal uptick, but kind of flat. We've got Mahindra Jaju on the phone line. Mahindra, what's your take on the currency? What's the outlook? Mahindra, if you can hear me, let's get a check on the rupee from you. Not sure if Mahindra can hear me. They will try and reconnect that line in just a moment. But at the moment, it's looking strong. In fact, 200-point up move in the Sensex in pre-open. That's what we're looking at, 23,216. Remember, we've seen a massive cut last week and pretty much seeing, in fact, 6-year lows and new kind of bottoms that were built in. So this bounce back quite welcome. 6999 for the Nifty. So we're still hovering around 7,000, trying to hold above that. We got Mahindra back on the line. Mahindra, how's the rupee looking to you at the moment?
Well, rupee looks like appreciating from here for two reasons. One is that there seems to be some sort of stability coming back to the global currencies market. We had the PBOC's statement over the weekend that there is no reason for yuan to devalue. Yuan has opened up stronger today. And then there seems to be some amount of momentum coming back into equities market. So one can hope for the FI selling to slow down for a bit. And finally, the rupee has been trading at a very strong resistance level of 68. It has not broken 68 for a long while. And again, while the rupee is trading close to 68, the circumstances are accumulating in favor of an appreciation for rupee. So I would expect rupee to hold very strongly at the current levels of around 68 and then gradually appreciates back towards 67.25, 67.50 during the rest of the month.
All right, Mahindra, thanks so much for joining us with that quick take there on the currency. Okay, let's just take a look at pre-open once again and see what's really looking like. It's seeing some amount of action building up at this point. We've got We've of course got a positive traction on the index. So Bank of Baroda, as expected, is seeing a bit of a setback. OMCs, as expected, are seeing a bit of a gain. We've got Jain India as well. Remember, news on that counter today as well. So we'll continue to be in focus as well. So essentially, we've got some of these names that are catching our eye in pre-open trade to start off with. I just want to run through some of those, banking names once again as well. Ruchit, as we head into trade, again for some of our viewers who've just tuned in, because banks continue to be in focus. A major sore point last week. We've also got a lot of commentary coming in from the regulator saying that they are expecting things to turn around for the banking sector over the next few quarters. Which are some of the names that are catching your eye? Any strategies you'd recommend there?
Overall, first, if I just give an overview again of the index, Nifty Bank Index, it has not shown any kind of positive formation in last few weeks. In fact, if you see PSU Bank Index, then they have been continuously forming this low top, low bottom formation, and still no signs of reversal are there over there. So I think going ahead, this private sector banks would now again show some sort of outperformance over here. The reason being that some of the stocks such as Axis Bank, Kotak Bank, they are trading at their medium to long term support zones, and we are also seeing some sort of positive momentum in the sense they are outperforming the broader benchmark indices of Bank Nifty as well as other counterparts. So I think Axis Bank is one of the top pick which we are looking from short term trading perspective for a pullback move. Apart from that, PSU banks would continue to form this low top, low bottom formation, and any sort of pullback move in these stocks, one should not get carried away by sharp up moves. Since the fall has been very sharp in last couple of weeks, then obviously if there is any pullback, then the pullback moves would also be very sharp. So one should not get carried away in any kind of sharp pullback moves in PSU banking space. One should clearly stay away till we get any signs of reversal on weekly or monthly charts. But definitely, I would suggest going long on Axis Bank at current levels, and to avoid PSU banks as of now.
Okay, and in fact, Ruchit was also looking at Vedanta today, and the stock in pre-open is looking fairly active. So keep your eye out on that one as well. Plenty of other names that are on Chandan's list, and we'll pull up some of those strategies for you. But Chandan, I also want to just come to you on some of these IT stocks, because we are in fact looking at some perhaps strength or some support coming in from those majors today. But do you still feel they're looking weak, or do you think that we could see some amount of a build-up in IT? We've also got Infi in the news this morning. They're looking at a new stock incentive program for some of their employees.
Yes, looking at the entire IT sector, this stock started the market decline in last couple of trading session break. TCS, which was holding well, has failed to surpass immediate hurdle of 2445 zone and slipped by around 200 points from that levels. Because of the selling at higher levels, and the stock might attract some relief rally or the bounce back move, the way it is taking support near to 2170 zone. So we may see a bounce back move in TCS, which may take it to 2290 level, that is 2% from the current level, but we are not comfortable in other counters like Tech Mahindra, HCL Tech and Hexaware. So TCS would be the stock where we are keeping on the radar. Infosys, if it declines near to multiple support of 1050, 1040, then only we'll pick for a bounce back move. So we'll select only the heavyweights counter TCS, second preference to Infosys, while we'll avoid Tech Mahindra, HCL Tech and the Hexaware.
All right, gentlemen, thanks so much for joining us on the show this morning and taking us through some of your strategies. Pre-open quotes coming in on your screen. We've got the Nifty, nice